We bring in our panel to discuss the Circle earnings and take a look really at crypto big picture. Todd Stankiewicz, co-portfolio manager of the free markets ETF, and Kevin Lehtiniitty. You say it.
Lehtiniitty. You were close. You did a pretty good job.
CEO of Borderless XYZ. I'm so glad you're both with us today. Thank you. Kevin, how are we feeling? I mean, we saw the Circle numbers, really the fact that the company really saw the doubling of the U.S. digital coins. I mean, that helped it along, but the cost going forward was the spot that put the stock to the downside.
I think what Circle's realized is being a single issuer as your entire business is becoming more and more difficult, especially in a macro environment of decreasing rates, increasing competition. So they're starting to pivot into being a financial platform versus just a stablecoin issuer. And we're seeing that with the launch of a blockchain called ARC. We're seeing that with the launch of a payments network called Circle Payments Network, CPN, and some of the other products that they're starting to roll out. It's about infrastructure now, not just about a token.
Right. And you know, when we talk about this, and we saw a lot of people signing up for this too, when you talk about the infrastructure part of this. Todd, some of your thoughts?
Yeah, I agree a lot with that. I think what's happening is, a lot of their profit has come from yield generation. And we're looking at a situation where yields are going lower and maybe meaningfully lower. I think right now the market's pricing in not so much a rate cut in December, but at least one by January, and then potentially two more in 2026. And so that can weigh on Circle earnings. So as they're moving away from being more yield-driven earnings, I think they're understanding that they have to be more of a toll taker, right? And building out that infrastructure and catching a piece of each of those transactions that happens. And that's going to give them the ability to hedge, I think, in the long term.
So it's not good enough that stablecoin was going up. Is that right, Todd? I mean, we need a lot more.
Well, yeah, I think it's about, like, you have to understand how Circle made their money, right? Circle was originally making their money by taking in U.S. dollars and issuing those stable coins. And ultimately, it was predicated on the fact that with yields being higher, they can make more money. If yields were going up, they can continue to bank on that as their primary earnings driver. But ultimately now, with that going down, how do they diversify that, right? So I don't think they're getting outside of the stable coin, U.S. dollar stable coins, but it's how are they building that infrastructure? How are they capturing more of that market in the stablecoin space?
And U.S. dollar stablecoins so different than each of the other crypto products here, Kevin. What else should we be looking at?
I think what we're seeing across stablecoins in general is this graduation from crypto to becoming mainstream infrastructure for payments and remittances. And we're seeing a lot of enterprise and institutional adoption picking up. Western Union, as an example, announcing that they're going to release a stablecoin. It's no longer this fringe crypto group of people that are working on stablecoins. It's now becoming real infrastructure that's used at scale with enterprises and institutions.
I mean, at some point, when do you think it becomes more mainstream, Kevin?
I think we're seeing the roots of those things taking place right now. We're certainly seeing that on the M&A side, all the activity around BVNK. We're seeing the acquisitions Coinbase is making. We're seeing MasterCard trying to acquire Zero Hash, Stripe buying Privy. And then we're seeing that with the amount of payments companies as well, which are kind of the backbone of remittances. AirWallX is hiring a stablecoin team. Wise is hiring a stablecoin team. Kind of all these people are now very actively looking at it. And the open question is, if we have a bunch of proof of concepts rolling out over the next 12 months, how many of those stick versus how many of those get rolled back or killed over the next 2-3 years? And I am a little biased, but what we're seeing at Borderless is a lot of them are going to stick.
Oh, that's amazing, actually. I mean, if you could have more than 50% of them stick, that would be amazing.
That would be incredible.
Let's talk really, Todd, same question. I mean, when do you think that these types of payments really become more prevalent, whether it's stablecoin, other forms of crypto?
Yeah, it's happening now. Look at the passage of the Genius Act, really. It provided a framework for stablecoin, right? There was a lot of gray area that companies like Circle didn't know how to operate. They didn't know what they expect going forward. But the Genius Act provided that framework. So now we know, what activities they can and can't do. We know that they have to be backing, all the stablecoin issuance with U.S. dollars, right? So this framework is making a reality. Although it's not being put in place, probably won't be until about first quarter of 2027. We are seeing the reality that people are putting things in place, and they understand that framework and they understand what they have to do. So this is a reality. This is happening, and we're seeing more companies move into this space. And not a lot of people talk about PayPal in this space, right? That's something that's happening too. And I think that they're a player, but they just don't have the infrastructure and they don't have the breadth that Circle has.
And we talk about adoption and integration and more usage, but Todd, what do you recommend for people to make money in this? Should they be buying Circle? Should they be buying Bitcoin? Should they be buying Ethereum or Solana or whatever else? How do you get involved?
I think they're two very different things. The reality is a company like Circle is benefiting from that stablecoin issuance and that infrastructure build out. Think of it as a way that if we're getting the pipe set up for like DeFi, although stablecoin itself isn't DeFi, it's providing that facilitation of payment, right? We know that money is going to be there. The challenge is if you have cryptocurrency, Bitcoin, Ethereum, which is a little bit different than Bitcoin here, it seems to be more speculation at this point, and it seems to be used more for trading for a lot of people. I get the theory behind it, but I think if we're talking about real payment facilitation, it's Circle, and owning companies like Circle, and to a lesser extent maybe PayPal as well. They're all in that space, and even Tether's kind of playing in this space a little.
Yeah, and you talked about, Kevin, in your notes, you talked about ARK already getting deep institutional buy-in from BlackRock, Goldman, et cetera. We were talking a little bit about that earlier. Kevin, what are some of your thoughts? How can people really get involved and maybe get with this growth?
There's certainly an explosion of new corporate chains coming. Circle doing ARK, Stripe doing Tempo, some of these other neutral chains that are being VC-backed. I think, as with anything in the blockchain space, maybe unfortunately, a lot of the easy way to get exposure is through the actual underlying tokens of the blockchains themselves, but that's certainly not a foolproof way. We saw a blockchain that was very payments focused called Plasma recently launched, and if you look at the XPL token charts, that has not really paid off for investors. So like most emerging technology still, this is primarily, in my view, kind of a venture asset class versus still a retail asset class.
Well, it's great to see you. Kevin Lehtiniitty, Todd Stankiewicz, thank you both so much for being with us today. Really great to see you both. Really appreciate it.